So we'll start off with a quick introduction. I'll explain the tax rate, the corporate income tax rate as proposed by the Federal Tax Authority, what persons are subject to tax, what income is subject to tax, the basis of taxation, what persons are not subject to corporate income tax, what happens if you have an entity or branch registered in a free zone, how do you compute taxable income, what expenses can and cannot be deducted from such income, what examples of income are exempt from corporate income tax, what happens if an entity makes a loss, the computation of taxable income, and the calculation of corporation tax liability, with some final thoughts. What are the tax rates proposed by the Federal Tax Authority? I must say, guys, it is a rather generous tax rate, very competitive. It allows the UAE to still retain its mantra as being the hub for international investment and for international businesses. The rate of corporation tax is slab-based, 0% for income up to 375,000 AED. That number might resonate with some of you guys because that is the mandatory VAT threshold. Only the income above 375,000 will be subject to corporation tax at 9%. Now, in order to continually commit to the OECD BEPS project, the UAE has decided, more details will be released in due course, that if there is a multinational entity resident in the UAE for tax purposes with global revenues exceeding 750 million euros, a separate rate of tax would apply on such income, and that rate is proposed at 15%. Like I said, more details will be released. This is the UAE's commitment to embed the BEPS project 2.0 into its corporation tax regime.